Jack's been with the credit union for over 13 years. He holds designations of credit union developer and educator and credit union business development professional as well. Some fun facts about Jack are that he's visited 48 states in the Union, as well as the Virgin Islands. It's a self-professed DFW sports fanatic. So feel free to shoot him a couple of questions or anything if you have any questions within his travels or his being a sports fan. Jack, the floor is yours, and we'll get with you a little bit later on.
Sounds good, Butel. Thanks for that introduction. And for those of y'all that are curious, still have yet to go to Hawaii and North Dakota as far as my North American / United States travels go. And Dallas Mavericks, absolutely my number one love. So anybody that wants to talk basketball with me, hit me up after today. So I do want to reiterate what Butel said and welcome everybody to today's financial wellness webinar. Well, we'll walk you through some of the steps to take you from member owner to homeowner, specifically the first time. And I do want to point out, typically someone from our mortgage department would present this information. They're super slammed right now, servicing our members. And based on my knowledge of the subject, they asked me to jump in and help out where I can. So I do consider myself a little more savvy than most, and hopefully I can impart some wisdom to you guys today. So kicking things off here, just want to give a quick overview of what you can expect from today's webinar. I will start by giving a very high level overview of what's happening in the housing market today. Try to get as real time as possible. We will be brief on that. We'll go through, especially coming from the first time approach, the different players and their roles in the mortgage process or the home buying process at large. And then we'll understand the home buying process. So go through kind of the steps so that whenever you jump into it the first time, you'll be a little bit more familiar and prepared with the expectations of what it takes to close out a deal. We'll follow up with some member owner benefits, talk a little bit about our mortgage process, how it can benefit you and potentially your family members. And then the last couple of things we'll go over are ideas about, are you prepared? Maybe there's some other resources you might need, whether it be from the credit union or making decisions outside of the credit union. So we always like to kind of get some interaction with our attendees. So if you haven't found the polling feature down there in the bottom right, you're about to see it. I'm gonna turn over to Butel, see what you guys are thinking today.
There you go. Hey, again, a shout out to all those out there in the East Coast Midwest that are joining us. For question one, I'm looking to buy a house within A, 3 months, B, 3 to 6 months, C, 6 months to a year, D, not sure yet, just researching. Any of these are correct. Remember, this is for you, the first time buyer that is out there, and we want to guide you to the process. What, Jack, what do you think is the outcome on this one?
I think a lot of people are probably kind of unsure right now. And since it's the first time home buyers webinar, I'm guessing C. I'm thinking people are wanting to, they just don't know when. That's my guess. What about you? Any guesses?
I'm going to say 3 to 6. Usually people nowadays are trying to go with the new builds, and that's what they're taking, about 3 to 6 months. But we'll see here in a second. I believe the poll has closed. The answer is C, 6 months to a year. More than 50% answered that question, and then follow 3 to 6 months. So that's about right, for the first time. So please go ahead, Jack, take care.
Excellent. Thank you, Butel. And for those of you, I saw there were at least 38%, if my math is correct, that didn't answer the poll. So be sure to jump in on the next couple. We love getting a little bit more of a pulse of the room. Helps us tailor our delivery to those that are here today. So as promised, want to just give a quick overview of what's happening in today's housing market. You can see the bullet points there, but I want to throw out a few figures that we looked up yesterday, specific to the rates. There's been a lot of talk about the rising rates and what that means. They've had an upward trend of late as the Fed continues to increase the short-term borrowing rate I'm not going to go into the details. Basically, the Fed is making money more expensive to borrow. What that means is that mortgage rates typically fall in line with that, and they're going up as well. Now, while this is intended to combat inflation on a number of fronts, it does have a quote unquote negative effect on the rates that you're seeing in the mortgage industry right now. As of yesterday, the average 30-year fixed mortgage, according to bankrate.com, was 6.11%. And again, they've been really volatile right now. But the thing is, they are as increasing for the long term. What that's done, though, is it's helped with inventory levels a little bit. So as people can't afford as much, more inventory is available. So that's stabilizing. Average listing prices are stabilizing a little bit as inventory levels increase. I will say they've only increased from some of the things I've seen about to the same level this time last year. But whereas before inventory levels were going down, they're now kind of stabilizing. Like I said, interest rates are volatile of late. And I know this bullet point says the time to buy is now. That doesn't apply to everyone. I'm going to be completely honest. But what we are seeing is a little bit more power going into the buyer's hands than the sellers, which has been the case for the last 2 to 3 years. So if you are looking at buying a house for the first time, strongly encourage you to take a look at what's going on in the market, take advantage of some of the inventory levels and listing prices stabilizing, and then locking a rate before it increases further. Keeping in mind that if it does go below the rate you get in today's market, you can always look at refinancing or working with the credit union to do a loan modification. So that's just a quick high-level overview of what's going on in the market. And now I want to transition to some of the players. I will attest firsthand. I bought my first house about 10 years ago. And if somebody had taken the time to share even this slide with me and what the players are and their roles, I would have felt so much more comfortable going in my first time purchase. So, and going through these, bear with me. We're going to spend quite a bit of time on this slide. I'm just going through so you understand. So bear with me, but we'll get through it together. Going through the players, the lenders, the first person you want to contact for your pre-approval. We want that to be American Airlines Credit Union, but we understand there's other options out there. But basically, they're in charge of making sure the mortgage process goes smoothly. While you can go with any lender you like, we'd be remiss if we didn't suggest American Airlines Credit Union. We do things well, and we'll go over that towards the end. The underwriter, moving down to the next line, it's basically synonymous with the lender. It boils down to this. Underwriting is the process a lender uses to determine if the risk of offering a mortgage to a borrower is acceptable while following the rules associated with any kind of mortgage. There are strict rules and guidelines that we have to adhere to. But again, lender and underwriter, basically the same. Moving down, the realtor. The realtor is someone who helps you find a home, typically guides you through the entire home buying process. The buyer, in other words, you on the call today, is who picks the realtor. And you can use programs like the credit union's Member on the Move program if you don't have a realtor already. In many of the states that are represented by this program, a portion of the realtor's commission is actually applied to your closing costs. So if you have no idea where to look, and finding a good realtor, it's a great program. I know me firsthand. I talk to family members, I talk to friends, people in my community. So there's a number of different ways that you can find that realtor, but it is your choice. On down the line, the inspector is also the buyer's choice, and there's someone you hire to evaluate the condition of a home before closing. We'll get through the different steps later on, but the inspector comes in typically after you've made an offer on the home, and you want to make sure that what you see is what you get. You'll want to hire someone who's very detail oriented and thorough, but keep in mind that it's their job to nitpick the problems and to give all the information possible to you. So take all that information with a grain of salt. I do want to point out you don't have to hire an inspector, but you'd be pretty crazy not to. Definitely want to safeguard an investment like this, and an inspector can at least get the information to you that you need to make any kind of negotiating tactics. I equate the inspector to the same as like taking a used car to a mechanic. They can tell you what's wrong with it, give you negotiating power, and ultimately help safeguard a big investment like this. So moving on, an appraiser is hired by the lender. So in using the example that the American Airlines Credit Union is doing your mortgage, an appraiser is hired by us, and it's the appraiser's job to make sure the value of the property or the home is in line with the amount of the mortgage or the amount you're seeking to borrow. The lender, again, AAFCU, hires the appraiser, and we simply pass along those costs, whatever it costs us, straight through to the closing costs. So we don't have an option to mark it up or to charge more or anything like that. Moving on down, the title or escrow agent handles all the closing documentation, does research to make sure there aren't any liens or claims against the property. In other words, it's their job to make sure that whenever that transaction transfers to you, the new buyer, that nobody else from the history of that home can come back and say, you owe me money. The seller determines the title company. So whoever you're buying the home from is the person that hires the title and or the escrow agent. Moving on down here, the insurance agent will be your choice and provide insurance to the home. They will be involved towards the end of the home buying process, but it's never a bad idea to get an idea of who you want to place your insurance with, because it is you, the buyer's choice, as to who does that coverage. And then last but not least on this particular slide, after you close on your home purchase, the loan servicer handles payments, including escrow if you choose. And just for clarity's sake, escrow is things like taxes, insurance, and any other funds that you might need to pay outside of the principal and interest on your mortgage. Many times, I want to point out, underwriters will sell your loan after they've packaged it all up. And the loan servicer will not be who you originated the mortgage with. I want to point out, in the case of American Airlines Credit Union, we will never sell your loan, and we will continue to be your loan service provider for the life of the loan. We'll talk about that more later in the presentation. So for those of you that were crazy taking notes and things like that, keep in mind, you can request a copy of today's presentation by filling out the survey, and we'll get that to you early next week. I probably stole your thunder, Butel, but here's your thunder back because we've got a poll question.
There you go. Thank you, Jack. A lot of team players getting together to get a house, but great information. Poll 2. It is a good idea to start looking at houses first before starting the loan process. A, true. B, false.
And Butel, I just want to point out, again, there's no right or wrong answer on this. So take your best guess. This question's really intended to get you thinking and serves as a nice segue to our next slide. So what do you think, Butel? If it were you, what would you do? Would you get a pre-approval first or start looking first?
Honestly, I would say by experience as well, I'll say yes, it's best to get a pre-approval, because you go out there, you see a house that you love, and then you cannot afford it, and it's like a bummer. So then you have to see reality and say, oops, cannot be what I like.
All right.
But
so the polls ended. Let's see what they said, Butel.
All right. So the majority went with true, that they believe that they should get start looking at houses before the loan process itself. Again, nothing right or wrong with the answers, but again, like Jack mentioned before, the more of you participate, the more fun it is seeing that everybody is understanding our process as well. But thank you, everybody that is participating again. Jack, back to you.
Absolutely. Thanks, Butel. Yeah, it looks like we had a little more than half. So I think people were just scared to have a wrong guess. The thing about this question is it's meant to get you thinking. So there's not really an exact science or right or wrong on this. However, the ideal scenario is to know about your market. So if you've already got some working knowledge on what's out there, what things cost, what you're looking for, absolutely, you want to get pre-approved. Now, if you're in the boat that says, oh, I'm a year away or more than 6 months away, maybe you start just getting an idea of what's around you. And we'll talk about that as far as the process later on. But you do want to have a working knowledge of what you can afford, you know, what your rate's going to be, things like that. So if you're in somewhere the 3 to 6 month window, I cannot make or stress this enough. Get pre-approved. Our pre-approvals are typically good for at least 3 months as a kind of a rate lock guarantee. So if you walk into a house, you want to make an offer right away. Trust me, in today's market, you want a pre-approval, and you want a pre-approval that you know is going to fund. So that's why I always encourage people, start that process as soon as possible. However, if you're a ways off, I would encourage those that aren't ready to make a decision yet, get with a realtor, get on an MLS list, as they call it, with some of the things you're looking for, so you can get a working knowledge of what's out there before you start saving for a down payment or anything like that. So in any case, this leads us into the next couple of slides. So I'm going to kick things off with just a real quick overview of the steps to buying a home. We'll spend a little bit more time on each slide, but it goes like this. Get pre-approved, figure out what type of loans make sense for you, find that home, and then close on the home. So we're going to break this up into kind of 2 sections before we pause for questions. I got 2 more slides till we pause. So I just want to encourage y'all, if you are listening in and your mind's running 100 miles an hour because this is your first time you're taking this information in, drop a question in the Q&A and we'll make sure we get to those in the next break or towards the end. So the first step in the process is to get pre-approved. We talked about, whether or not that's a good idea on the last slide. However, if you're ready to make an offer in the next 3 to 6 months, strongly encourage you to do that. I do want to point out right now, loan application volumes and the overall demand in the housing market are starting to stabilize. However, they're still much higher than in previous years. So it's important to note that mortgage purchases may be taking around 45 days to close right now, depending on how buttoned up and prepared you are with the necessary documents to push them through. What I'm saying is the sooner you can start the process, the better. And our mortgage pre-approvals, as I mentioned before, are good for 90 days. So it never hurts to look into it now. And also worth noting is the best way to apply right now is definitely online. It's the fastest way to receive a response and get the process started. So we can certainly help with that. There are other mortgage brokers out there. I've used them before. My friends and family have used them before. However, I will say the credit union has gotten 90% of my business when it comes to the real estate market. And that's because they're really good at what they do. So the instructions on the screen here say for pre-approvals, find a lender. We can certainly help with that. There's information there on how you can do that. We have mortgage loan officers in the New York area, Miami area, Chicago area, and then a ton in the DFW area right now. So you can visit with them one-on-one. Like I said, the easiest way is to visit our website or go to homeloans.org, and that'll take you through the application process. You can also give us a call at the 1-800 number, extension 4202 for English-speaking applicants, or our new Spanish line is at extension 4203. The other thing you're going to want to do is gather all your paperwork. The credit union has a very intense pre-approval process, but the reason for that is we want to make sure that if we give you the green light, we know that loan is going to close. So definitely gather all your paperwork. I don't have it here on this slide because it's so much, but we do have a checklist. And if you request a copy of today's presentation, we will include that checklist that has all the necessary documents that you're going to need. It will absolutely expedite your process. Just to give you an example of some of that paperwork, we're looking for the last 2 pay stubs, W-2s for all borrowers, so the last 2 years worth of tax returns. We're going to need bank statements and documentation of your current housing situation. We're going to need to know that the money that you intend to use for a down payment is there. But again, that checklist can be requested whenever you request a copy of today's presentation. Once we get all that, the loan officer will take a look at it and be able to issue you a pre-approval letter that gives your amount, your rate, etc., dependent on the type of loan you want. So that brings us to our next slide. figuring out what kind of loan you want. There's so many options, both with the credit union. There's even more outside of the credit union. But for all intents and purposes, a lot of people really look at fixed rate conventional loans, 15-year and 30-year. So fixed rate conventional is a traditional type of loan. It can give you the peace of mind that your rate won't change throughout the entire life of the loan. And a fixed rate loan is typically best suited for those who plan to own their home for an extended amount of time. The other option that the credit union offers, as do a lot of lenders, are adjustable rate mortgages, also known as ARMs. That's the abbreviation for it. They provide you an initial fixed rate. So, for example, if you have a 5/1 ARM, your rate would be fixed at a certain interest rate for 5 years, and then it'll reprice the interest rate based on market rates at the end of the fixed term. So again, using the example of a 5/1 ARM, it's going to be fixed at a certain percentage for 5 years. At the end of that 5-year period, every year it'll adjust unless you refinance it or sell or something like that. But we do have programs that provide an initial fixed rate from 1 to 10 years. ARMs are best suited for member owners who want a lower initial interest rate and or don't plan to own a home for an extended amount of time. I am a huge fan of our 10/1 ARMs. They do a fixed rate for 10 years, gives you time to pay down that balance, figure out if you need to refinance over that 10 years, etc. And we are one of the only lenders out there that I've seen that offer a 10/1 adjustable rate mortgage option. Could be a really, really good hybrid approach if you're scared of the fixed rate or the adjustable rate on their own. Moving on for sake of time, I do want to point out that the credit union can loan up to 97% loan to value, assuming the appraisal comes in at or above the purchase price. So we do have a first-time home buyers program, which will allow you to put as little as 3% down on your home pending credit and income approval. A couple other options you may want to consider. I saw somebody out in San Fran. I know things are super expensive out there, so you may need a jumbo loan. Or anybody else looking for a bigger house, or maybe your market's just really competitive. We do jumbo loans and super jumbo loans, which do have a little bit more lending criteria or hoops to jump through. However, we do them, we love them, may be an option for you. And then last but not least, if you're on this call, you're probably not looking for a second home, as this is a first-time home buyers webinar. But as you look to the future and building your portfolio, we do second homes, we do vacation homes, and we even do investment properties as well. So hopefully that gives you a little bit of an idea of the different options that we offer. But ultimately, again, the best way for you to check rates, find out which option is best for you, is to go to homeloanswith2as.org and walk you through the process. Butel, you ready for that demonstration of how they can kind of take a look at their different options? You're on mute, brother.
Yes, sir. I'm just answering a few questions here in the Q&A. You touched one of them already, but yes, let's go into that just for the sake of time. Some people were asking about San Francisco, about the mortgage, about jumbo.
We'll get to those. Let's show. I think I gave you the privileges to share your screen. I see it popping up right now.
Good. All right. So you guys see the screen. Basically, okay. So basically, you are in our aacreditunion.org website. This is what it looks like. You go to your borrowing, straight to home loans. Easy to find, very easy, accessible site. Once you get there, it's going to bring you to our home loans page. There's a lot of info there, but we're going to go straight into the Apply Now itself. That way you can see our different ways to find information. You have the home basics, rates, and services. This is one of the more featured or liked ones. Jack, we usually go to the check rates. Is that correct?
Yeah, I like that one, and I want to point out while you're navigating there, Butel, and So I'm going to ask Butel to just fill in while I'm talking some of the different fields that we'll need in order to assess what your interest rate would be, what loan options are available to you, as well as what the overall costs are. But while he's doing that, I want to point out this website has more than just this feature. This has tons of calculators, home loan basics, resources available to you. And then ultimately, this is where you would start your online application. Going back to our actual aacreditunion.org homepage or the website, that home loans page has all of our current offers as far as promotions go. It has a number of calculators as well. But what I've asked Butel to kind of do here is do a demonstration of a $300,000 house with a 20% down payment. And we're doing this as a single family home. There's a lot of caveats down below to help us determine what loan options are right for you. But yeah, I think you got it all filled out, Butel. And we're doing this as if it would in Tarrant County, which is where our headquarters is. Just makes sense. So Butel, back to you.
All right, so Jack, we brought up the rate sheet and the different products that this member may be qualified for based on the information that they have. And as you mentioned, we have the ARMs, we have the conventional 30s and 15s, and it gives you an idea what the rate would be. And you mentioned that the average national rate was 6%, something a
Yeah,
little more.
6.11. So we're right now promoting almost a full percent lower, 100 basis
Correct.
points. That's crazy low compared to what's out there.
Correct. So you will see the APR itself, how much the monthly payment will be, how much the closing reserve that you may need, et cetera. And again, you can determine what do you think you need. You can always move the results at a lower rate if that's what you found, and it continuously changes the different products that we have and what would it be. So
Yeah. Do me a favor, Butel, on that top one, hit details on the very top, that 30-year fixed. Click that details button. I wanted to show our attendees here. This has a breakdown of what all might go into the closing costs. And I just want to point out that we're extremely conservative in this number. Typically, it does come back lower, but because every single county, state, et cetera, city have different requirements for their closing costs, we have no way of knowing exactly how much it's going to cost. Appraisals may be in high demand. We may have to pay a little bit more to get it done quickly. But all in all, that summary of charges is typically higher than the actual amount, but we'd rather be on the safe side and be transparent with you about what it might cost to close the loan. So anyway, if you want to hit back, you tell. The other thing that I really want to drive in right now is whenever you're comparing your mortgage options, always, always, always look at APR. The APR is the total cost of the loan. What that means is it takes into account everything. If you buy points, and points are where you buy down the rate. It takes into effect closing costs, et cetera. And ultimately, it's the best way for you to compare apples to apples, the product itself. Everyone can advertise a great interest rate, but the APR on any loan, not just mortgages, takes in the entire cost of borrowing those funds. So hopefully, if nothing else, you learned something today in that respect. Butel, before we kick back over to the presentation and answer any questions, was there anything else that you wanted to point out on this particular page?
again, if you get lost, just feel free to call out to one of our subject matter experts. They will walk you through it. That's why you're our member owners. We want to take care of you. We want to make it right by you. They will tell you which one will work best for you, and they'll help you how to accommodate yourself to have a successful purchase itself.
Absolutely. So if you want to throw back
I'm going to
the
stop sharing.
Zoom roll back to me, perfect. I see it.
Yeah. And let me grab here and throw it back to you. And you got it.
All right, so let's go rapid fire. I'll try to be brief. I know I can talk a lot, but let's do about 3 or 4 minutes of questions, and then get back into the rest of the process of getting that mortgage. What do you got for me, Butel?
All right, let's see. Somebody's asking what are points?
Okay. To put it, and I know you popped that up earlier, Butel, when we were exploring the web page. Points are you pay more on the closing costs, but you're buying your rate down. So if you pay for a point, for example, it's a certain percentage of the loan itself. You pay that in your closing costs and you get a lower rate. Points are typically best for anybody that wants to hold the mortgage for an extended amount of time. That's where you see those points, quote unquote, paying for themselves. If you want to consider this option, it's something that you can visit with a loan officer about in more detail, just because every situation may be a little bit different. What else?
Thank you. Do we do only mortgages in Texas?
We do them in the continental United States.
Correct. So you already talked about the discount points itself. They're asking if we have a loan to purchase a lot.
No, we do not do raw land and we don't do construction loans. So what a lot of people will do is whatever construction company they're going with or builder they're going with, they typically have resources available for construction loans. They typically are a little bit shorter term and higher interest rates. So once you get that construction loan or in the process, go ahead and reach out to a loan officer. They can get you pre-approved so that once that's all completed and the inspections are all done, you can move in and refinance your home right away. It'd be like taking a mortgage out on a new home or a purchase. It's no different for us. But no raw land, no construction loans. We're pretty vanilla. But once you get to that point, we'd be happy to help you refi for a better rate and a better term.
Thank you, Jack. Jack, and this is the one that a lot of people like to ask. What are the advantages or limitations to get their mortgage through us, the American Airlines Credit Union?
You know what? I'm going to save that question for later on because we have a whole slide dedicated to that. We already pointed out one, though, that we're close to 90 basis points below the national average. I suspect that we'll probably be raising our rates a little bit. Don't take that for gold, but we're usually, when rates are rising, a little bit slower to adjust. And that's just to make sure that we're not, that we're giving the best value to our members. So I'll go over those here in a little bit, though.
No problem, no problem. For anybody that is wanting a copy of the deck, please make certain you request it on the survey. That is going to be the easiest place for you to do so. You can put your email address, you can put the information you're seeking, and again, we'll send that out to you next week. At the end, we'll also let you know another way that you can see this. But again, that we'll mention that at the end itself. Jack, I think right now we are pretty good based on time that we got and everything else that we got going on. We can move forward if you don't mind.
But I just want to point out that our rates are always available either through the website we showed. That's your best bet, and it's more all-inclusive to your current situation. Or you can always go to aacreditunion.org. There's a little button in the right-hand corner that says rates. So for those of you asking about specific terms, amounts, etc., your best bet is to go through the demonstration that I showed or that Butel showed you. And that'll give you a little bit more of a personalized quote. Take a screenshot of that page and then start the application process. So for sake of time, and we will get to some of your questions in the next few slides, I wanted to just jump right back into this. So we talked about, just to review real quick, the importance of pre-approval, the importance of considering what options are available to you. And now comes the most important part, finding your home, right? So you're going to want to consider a few things, one of which is the price ranges of what you can afford. Talked about some of the different calculators out there to help you determine the total monthly cost of a home. Make sure you're including property taxes, insurance, HOA fees, interest, principal, and especially maintenance or CapEx costs, as I like to call them, capital expenditures. Include all of those in your monthly costs. There's calculators out there on the credit union website as well as on Google that can help you determine what the real cost of a house is going to be and if it fits your monthly spending plan. The other thing you want to consider is any special needs. A lot of people will just fall in love with a house for the time being, but it's really important that you recognize there may be family members, parents that may be moving in, may have mobility or space concerns, and all of these may play a role in your decisions. There also may be HOA guidelines, covenants, or what have you, especially in subdivisions or condo communities that you simply don't want to live with. So these include rules about maintenance, appearance, pets, parking, etc. Ultimately, if you have any special needs or if there's certain things that you just can't live with, you're going to make sure you include those. A really important factor also is how long you will live in your home. This may influence the type of loan that you choose or what you're willing to pay. We talked about that earlier. Talked a little bit how many people are going to live in your home. Do you have a baby on the way? Again, are parents going to be moving in with you? Did you want a special a special guest room for when visitors come in? And you also want to consider the layout, the design, the configuration. A lot of this can be figured out if you're working with a spouse or a significant other with those conversations. If you're at it alone, jot it down. Make sure you have something to give to your realtor so that they can help identify which homes are actually going to meet your needs. I always joke around, needs versus wants. We all would love to have a pool. We'd love to have a jacuzzi. We'd love to have an entertainment area. All these things are nice wants, but what do you really need? What are you going to be willing to put up with from a maintenance and a cost perspective? So I always joke around, like a kid walks into a candy store and of course he wants candy, but he needs clothes. In the same way, you walk in the house, you need good bones, you need good infrastructure. Like, do you want the hot tub? So anyway, something to consider. A lot of people don't really factor this in, but schools are important, especially if you have kids, but also for resale value. The better the schools, the better the home value typically. And then last but not least, and honestly, this is one of the most important for me, is proximity to what is important to you. Do you want to be close to work? Is shopping and restaurants important to you? Do you have a car? Can you afford to live further out and get a cheaper home because the commute's okay with you? Ultimately, all of these things are really important into determining and finding your home. And it's something that the realtor can work closely with you to address what you really want. So let's say you find that home of your dreams. You're working with the realtor. You're ready to make an offer because you've got that pre-approval. You know what it's going to cost. You're working with your realtor to go in and you make an offer. So you submit that offer. And the realtor will help guide you through that process. There may be some back and forth process of negotiations. But let's say you came in strong, the seller accepted your offer, and you're ready to execute a sales agreement. Now, this usually includes earnest money. And earnest money is typically refundable if you back out of the deal. You're also going to be asked to put down option money. This is typically non-refundable unless you move forward with the purchase. During the option period, it gives you the opportunity to evaluate the property further and to decide if you want to move into the closing period. During the option period, it's important to move quickly to hire an inspector, which we went over earlier, and begin collecting quotes from insurance providers. At least in Texas, you'll typically have 10 days before you and your realtor can come back to the seller with any issues that the inspector found. You may be able to use those in a counteroffer situation where they will remediate any of your concerns or give you a little bit of a discount based on what the inspector found. Finally, once everything is agreed upon, you may have a few amendments to the sales agreement, and that's what's going to go into the closing process. So again, there's the sales agreement, the option period, and then potentially a counter offer in any kind of a sale. I want to stress again, the realtor that you choose should be familiar with this process and should be your advocate in making sure that they're looking out for your best interest. Lastly, you'll be presented with the final conditions that are on the contract, and this applies for almost all states. These should match the pre-approval letter that shows the sales price, down payment, loan interest rate, etc. In other words, once those final financial conditions are presented to you, you'll sign off on them. You'll set up a closing time, typically at a title closing company, and sign off on all the documents and accept those keys to your new home. If you're at a title company office, they may even give you a new pen to walk out with as a souvenir for your troubles. But that's basically the long and short of it as far as the process goes. I know earlier, Butel, somebody asked about some of the advantages, disadvantages of working with the credit union. So I'd like to highlight First, some of the potential disadvantages. Um, in full candor, we're straight conventional lending. We don't do FHA, we don't do VA, and we don't do any other additional programs. So if you qualify for a mortgage with us, it is a conventional lending platform. With that said, we do have extremely competitive rate and fee structures, as we've shown. We do not charge a brokerage fee, we don't sell our loans, and we don't increase the interest rate to try to pay ourselves. The interest rate is the best that we can possibly offer right now. And as you saw earlier, almost a full percentage point lower than the national average. Not only that, but we have 100% in-house lending, starting with your loan origination and your underwriting to your processing funding, all the way through the life of your loan and your servicing. You know who you're going to work with. And hopefully, you keep your loan with us for an extended amount of time. That'll give us the opportunity to refinance or to do rate modifications on down the line if it fits your specific circumstances. Another perk, your loan originator is also your processor. So they're going to hold your hand through the whole way, and you know who you're going to work with. I talked about it before, but we do not sell your loan. I have a loan outside of the credit union, full disclosure, and it's already been sold twice. So trying to keep up with where my payment's going, who can help me, things like that, it can be a headache. And that's a really nice value add that we have for our member owners. And then speaking of member owners, last but not least, those of you on the call that are already members may have been the beneficiary of an annual bonus dividend. In other words, as a not-for-profit institution, the credit union has the ability to give back bonus dividends if it's available. I can't guarantee it. There's been 1 year in like the last 13 years where we haven't been able to, but suffice it to say, if you have a mortgage with the credit union, you stand to get a lot more back than if you don't. Typically, our bonus dividends are calculated off of any interest paid into the credit union or earned with the credit union. So again, by having a mortgage with the credit union, you set yourself up for some additional change at the end of the year. All right, Butel.
Yes,
I'll let
sir.
you take this one.
Well, question number 3. Now that I know more about the mortgage process, I feel A, ready to start my pre-approval now. B, somewhat ready. C, not sure. I feel I can use extra help with my finances first. Great. Like we mentioned before, none of these is actually 100% correct. We're all in different stages in our lives, and that's why we offer this first-time mortgage process, as Jack has been discussing and offering to you all. So, Jack, I'm going to say that somewhat ready most of our people are going to be.
I'm going to agree with you. This is a major decision. For those of you that are ready to start your pre-approval now, kudos to you. Hopefully I've done a good job. If you're somewhat ready, perfectly understandable. And for those of you that say not sure, you could use a little help. The next slide is for you. So pay attention to that if you answer C. But Butel, I think we're about done. So I'll let you see what we've got.
Hey, Jack, you're not going to believe it, but it's a tie, all 3. It's the same. It's the same. We got some people ready, somewhat, and not sure. And again, they're in the right place at the right time. Like you mentioned just a minute ago, the benefits are more than, and our products will match any product out there, even though it may be a different name. Like you said, if we don't have FHA, but we have something that is comparable or very close to. So back to you, Jack.
All right, thank you. We're on the home stretch. Y'all stick with us. We've definitely got some more valuable information coming, especially for those of you that maybe you said you're not quite ready, or no matter where you're at, to be honest. We do have a financial wellness team that can help you prepare for that mortgage purchase, improve your credit, create a spending plan, things like that. So if you were one of those that say you're really not sure, you don't think you're ready yet, maybe you need to save up a little bit more for a down payment or to cover any future maintenance costs, strongly consider reaching out to our financial wellness group. Again, they can create that down payment savings plan. They can help you improve your credit rating, and really important, can help you create a realistic budget, aka spending plan, so that whenever you get into that home, you're not house poor. right? You don't want to have to give up on your typical night out to grab a bite to eat once a week just because you have to pay maintenance costs. So again, this is a great resource. It's free for you to visit with our financial wellness coaches, and you can call them or email them, set up a consultation, help you prepare for the future. And even if you're not looking to borrow to buy a home, they can certainly help you with your credit, spending plans, and all of these things, even if you don't go through with a mortgage. So on top of this resource, the financial wellness resource, we do want to give you some additional resources that can help you learn a little bit more about the home buying process for the first time, or to make sure that you're ready whenever it comes time to that pre-approval. So for those of you that request a copy of the presentation in your survey, we'll send you the mortgage application checklist, as well as a document that outlines the 6 reasons to own your own home and the 9 reasons to consider financing your mortgage with the credit union. The other resources you have available are our most current rates. We showed you one way to get those. The other way is to go to aacreditunion.org, click the link that says rates, and then go down to home loan rates, something like that. You'll find it. I know you guys are smart on the call today. But you can always find those on our website. And then lastly, for those of you, again, that request on the survey, you'll have the copy of this presentation to guide you through the process and hopefully answer those questions as they come up on down the line. So as a final review of ways to get started, we went over this earlier, but feel free to check out our website and navigate to that Apply Now area for different calculators and to apply. You can also go straight to Home Loans. That's homeloans with 2 A's.org. You can give us a call at one of the English or Spanish speaking extensions, or reach out to us on the survey and ask that you be contacted by a credit union representative, and we'll make sure that we connect you with a loan officer to answer any additional questions you might have. And it's really good to meet with somebody or to visit with someone on a one-on-one basis, especially if your situation's unique. They can really drill down and see what options or solutions are best for you. So I'm going to pass the baton back to Butel right now. He's got a few public service announcements just about what's going on in the credit union, offers, things like that. But stay tuned, as here in the next 5 minutes, we're going to reserve the final 5 minutes for any additional questions that you guys might have. So Butel, it's to you, my friend. And you're on mute.
Thank you, Jack. Thank you for that. Yes, we want to make certain that we allow those people that are our current member owners or future member owners to know what we can do. Well, let us be your financial first. As we're talking today's webinar, we're talking about mortgage. Let us be your first financial option. There's a lot more benefits, as mentioned before. Our rates are number 1 on the list. Number 2, that we keep our mortgages, and so many more, as Jack mentioned. Let us be the first one to check your credit card rate. A lot of us at times walk with multiple credit cards in our pockets, and we don't necessarily remember or know what our true rate is. I know that a lot of people have 24% in their wallet. I mean, especially with those major banks that they have credit cards from. You know, you could probably get something with us as low as 8.5. So again, it doesn't cost anything to review that. What about your car? You probably have a gem in your drive up that you can probably refinance the rate itself, lower it, because a lot of people have been getting cars and they've been getting it at higher rates because some dealerships are demanding that you do the loan with them. But we can always refinance that. We can make it lower. We can probably bring it down to a single digit type of a rate itself, or you can refinance your vehicle, use the cash flow from that available to pay some other high debts. So again, let us be the first one to help you open that account for your new baby born, for your emergency fund, etc. There's so many firsts with the credit union. Feel free to reach out to us. So I'm going to continue to the next step again because of sake of time. What we want to do is we want to make certain that those people that are not necessarily members yet, especially we had 1 or 2 that were attending the webinar that are not, we want to make sure that while many of our programs don't require for you to be a member owner, all our loans and saving products require a basic membership with the credit union, and that's called your share account. It's an umbrella account. After that, once that's established, you can take advantage of all our products and services. So consider opening that. And for being on today's webinar, if you look at your right, there's a QR code, a little quick response code. Put your phone up to it. It'll take you into our application for you to become a member owner of the credit union and utilize promo code BD, B as in Bravo, D as in David, 4412, and we'll credit the first $6 into your account. It's not a lot, but it's more than a lot of other places. And not only that, it gives you the option to learn of what we have and what you can take advantage. Remember that once a member, you're always a member. So it doesn't matter if you leave the air transportation industry and you go work for the city or for some other private institution, you are always welcome to take advantage of our products and services, as we have all different ways for you to reach to us 24/7 itself. You can take advantage of joining us on our website, contacting your local branch, the one you probably walk by in the airport, or by calling our 800 number, and somebody will help you with that. If you have any additional questions, or you would like to learn more about the credit union, we can help you achieve your financial goals. Please reach out to us at weworkforyou@aacreditunion.org. To wrap it up, or to bring it full circle, better said, if you're in the business to find a mortgage itself, and you get one of our Platinum Rewards credit cards as well, and everything is approved, you can earn up to 60,000 connection points. These are points that you can purchase gift cards, travel, cruises, all different kind of points that you can use for different products that we have, furniture. For more details, the loan officer will help you with that. We want to make certain that you also take advantage of our checking account. Having a checking account with direct deposit gives you certain discounts or certain products. And for this month, we are also offering that the first $25 you spend on your new checking account, you spend it, not just take it out of the ATM. So you use your debit card. We will pay you back the $25, that the first 25 itself within the first 60 days. So again, it's a win-win right there. And as I mentioned before on the first, you know, we have a car rate as low as 1.9%. So you may want to let us look at your car rate and again, bring it down for you to use that cash that you may have on the car, either save it for emergency fund or pay something else that is at a higher rate. And we will also even defer the first 90 days when it's a new car loan that you're financing with us, or if you bring a used car loan from another institution as well, we will be able to push the payment out the first 90 days. And again, for more details, our loan officers will explain that to you itself. We got about 4 minutes, so we're going to go to the next slide, which is going to be for those that are member owners already, and they want to make certain that they pass the gift of membership to their family members, grandkids, co-worker on the air transportation industry next to them, and anybody that they refer and the account is open, the referring person gets $25. So up to 10 a year, that will be $250. So again, don't forget to come and visit us at our website. Let me go back to the questions and answers, Jack. That way we can take care of this for our members that are waiting. And if we don't, please submit them on the survey. Okay, so let's see what we got here.
You want to jump to the question slide?
Yeah, let me jump there. There we go, questions.
I'm
So
ready.
I see that you already jumped here. Would it help my credit approval at the credit union for a mortgage loan if I pay off my current auto loan with us?
And I think Mark's left, but this is a great question for everyone. And the reason why I wanted, and I'm glad you brought this up, Utel. So anytime you can reduce your monthly debt obligation, it's going to allow you to purchase more home, right? Not only that, but it can positively impact your credit score, which is going to put you in a better situation for borrowing. I will say a majority of our mortgage loans, we don't risk price our loans for anybody good credit or above. I want to say in the mid 600 range or above. is going to be the same rate. And that at that point, it's just a matter of your debt to income ratio on a monthly basis. So that's one piece of that question. The other piece I really want to stress is if you are in the pre-approval process, you never want to take out any large credit decisions against your name. In other words, don't open up a new credit card. Don't finance a new car. Don't go buy another house when you're looking at buying a house. These will all have very, very real repercussions when it comes time to doing the final closing on your loan. It's something your mortgage loan officer will speak to you about. But if you're in the market and you're serious about getting a home and you're in that pre-approval process, definitely reach out to your loan officer before making any major credit decisions, whether that be paying off a car or whether that be financing anything new.
Good. Thank you, Jack. We have somebody asking if they're married. In this case, they live in Texas, but I guess this applies for anywhere in the continental U.S. Can you have only one borrower on the application?
You can have multiple borrowers. They must all be in our field of membership. So if you're married or you live with someone, they are considered eligible for membership. And that mortgage can be taken advantage of on the first day of membership. So I saw another question. There's no timeline that you have to be a member with the credit union before you qualify. One caveat to including somebody else on the loan is that credit scores, typically lenders like ourselves are going to look at the weakest link when it comes to credit scores. So consider that. The other consideration is the earning power, however, of two people over one may be able to approve you for a larger loan. And then finally, if there is one of those situations where you split, both of your names are on that mortgage, and that can be kind of messy. I'm not going to go into the details, but if you're going to go in with someone, make sure y'all are both in it for the long haul.
Yes, for sure. We want to make sure that all our member owners are good and standing not only financially but in their relationships. Jack, this is one that it's also been asked quite a bit in priors.
All right, let's take one more, and then we're at time, so I'm good with this.
For first-time homeowners, do you offer assistance with closing costs if you don't have enough money to cover the cost?
Typically, no. There are programs, FHA and VA loans, that may be able to assist you that and roll those closing costs into the mortgage itself. However, those are typically a higher rate and have more restrictions. For example, I know that you can't pay down your amount early for PMI on certain loans. We feel like our product right now, our first-time homebuyer product, is a 5-1 ARM with as little as 3% down. That if you are stretching yourself beyond those means, it may not be in your best interest to have a mortgage. And I'm just putting that as kind of a tough love statement. We as members and as employees of the credit union are constantly looking out to be an advocate for members. And a no doesn't necessarily mean a no forever. It means not yet a lot of times. So if you're in one of those situations where you're still looking to make or save enough for a down payment and for those closing costs, you may want to look at our financial wellness program, visit with somebody and see what you can actually do. I don't want to deter you or anyone on this call from owning a home, but sometimes it's just not yet right now. And we definitely want to look out for your best interest and not get you into a bad situation or a situation where you're going to be house poor. Oh, one other one I just saw, Butel, is AAFCU membership free. Today it is. I use promo code BD4412. Whenever you're filling out your online application or if you drop by a branch, we'll cover that opening to $6 for you.
Correct. Yeah. Anyways, Jack, like you mentioned, we are running out of time. We just want to make sure that anybody that's having issues financially or wanting to improve their credit for any future investments, either a home, a car, or anything like that, feel free to reach out to our financial wellness team. They will walk you through the process, no cost. They will be next to you to make certain that you're successful. And once you have reached the peak, we will hand you off to do whatever it is that you like to do. On behalf of Jack, myself, Sarah, the credit union, and everybody else, thank you again for joining us. Go to our aacreditunion.org page for events. Don't forget that we are available to you through our survey for the webinar deck. You can always follow us on Facebook, Twitter, Instagram, and this is the other way you can see this. You can go into our YouTube channel. You like it, you smash it, and you'll be able to see our presentation. And that way you don't have to get paper, you'll be green. You can see us, you can understand everything that we have mentioned, and feel free to reach out to us. Join us the next time. Jack, back to you. You're muted. Jack, you're muted.
My bad. I thought I'd get through the whole presentation without doing that, but alas, I did. So yeah, like Butel said, just want to encourage you all to take advantage of the resources we have available. We definitely want to help you out. If you need a copy of the presentation, indicate on the survey. If you want to visit with someone, indicate it on the survey. If you want to follow up and watch us again or any of our other pre-recorded webinars, like Butel said, check out the YouTube channel. So behalf of Butel, again, Sarah, myself, I want to encourage you all to stay healthy, happy, and safe out there. We're definitely looking forward to hearing from you and seeing how we can help you out. We'll see you on the next webinar.
Thank you. Thank you.